Hi everyone, I'm Alan Friedman. I'm a CPA and a partner with a firm called Freidman, Kannenberg and Co. We are a CPA firm located in the Northeast, and this is one of my favorite people in the entire world because he likes to dress like me.
There you go. My name's Jobe. I'm a music retail consultant. Been here with Alan for 13 years.
Yeah. Exactly. Today, by the way, happens to be our 35th anniversary of our firm's existence, which is amazing on so many levels. We didn't think we'd make it 3 years. Daniel actually had probably 10 or so years of experience in music retailing before he joined our firm. So he has over 20 years of combined music retailing and financial expertise, tax planning, all levels of tax compliance and accounting in the music retailing industry, which is amazing because he looks like he's 23, which means he started at the age of 8.
Yeah.
If my math is probably not right.
Let's hope that's correct.
Yes,
but
okay.
You know what's great about it, Alan, is with all this experience, many times you tell clients we're not lucky. Or what do you say? You say many times we're lucky.
Or I say, like we're not necessarily smart, but we are lucky because we're in that unique position where we get to see all kinds of things, mistakes, sometimes bad judgment in the running of music stores, and again, it's not that we're smart, it's that we have figured out over the years some of these crazy things that music retailers do, and we are constantly consulting to music store clients as to how to avoid those pitfalls and to do some of the best practices in music retailing.
Right, which is when we got the call and asked us to present, unfortunately we can't be there with you in person, but the message is still the same, that there's some tried and tested methods that work in this industry.
Right.
And we're going to share those with you today because many times people call and say, tell us what your best person does. Well, you're going to see a lot of the characteristics of what our great stores do. So as you see these things and you say, well, I can't do that, I just want to share with you, there are people out there that can.
That's right. And it's become more critical, hasn't it, these days, given what's going on. We're in the middle of a pandemic.
Yeah.
And so that's an entire new layer of anxiety and challenges.
Yeah,
so
we'll talk about that. But before we talk about it, Alan, if you don't mind,
yes,
these people may not know what you very well because you're a guitar player. And we're talking to the Violin Society.
And a trombonist. Who better to talk to a Violin Society than a guitar player and a trombonist?
At least I was in the orchestra with them. That's right.
And can read music.
So Alan had a band. Alan, you want to tell them the name of your band?
I never know what Daniel's going to do in his PowerPoint presentations. This is a band of all accountants called the Accounting Crows.
Right.
Mm-hmm.
And they're still together. A lot of them still together.
Yes, we're a little older now. My Jimi Hendrix has widened a little bit.
Just a little bit. But here's when you were...
Yes, when I was part of the British invasion.
Yes.
I was the only American in the British invasion.
There you go. So you did a little bit of that.
It was a fun band.
And then we had this band when...
Yes, that was my disco years.
Yeah, yeah.
Disco here, disco there.
And you were the village
idiot.
Okay, right. But, with all of this talk about the election, there's something else that people don't know about you, Alan.
Yes, I wanted to, I couldn't make it a musician, so I think I'm going to pursue a career in politics.
So there you go. It's an early announcement, but... enough of that. Okay. We always like to have fun. You guys may have seen us present before, but we always like to have fun. But we're going to get right to it because this is why you're here, the best practices. So we're going to share some best practices starting right now. Here we go. Topic number one is going to come as no surprise from a couple accountants. We like the financial data. We know how much you guys probably like the strings, the instruments, and everything that goes with that. And we love that too, don't get us wrong. But when you're calling a professional, you want to know, how are we doing? What's our financial data look like? And the scary part is this, guys, is that many times people call and will say, hey, no problem, send us a balance sheet or income statement. They're like, I don't have one of those, or I'll have to talk to my accountant. And our opinion is, in this day and age of technology, that's just too late. Right. Everything's laying in front of you where that you should be able to keep track of everything on a real-time basis to be able to make some decisions. Mm. It's not only critical for us as an advisor, but Alan, how do you make a decision on how to run your business on a daily basis?
Exactly. The funny thing is, if there was something ailing you, physically ailing you, you would go to a doctor. What they're going to run diagnostic tests. They're going to do some x-rays, or a CAT scan. That's data. That's their critical data to assessing your health. This is no different. The financial data that we rely on to assess your financial health is a financial statement comprised of predominantly a balance sheet and an income statement. The two most important documents, in our opinion, to assess not only whether you're making money or not, but your liquidity, how your inventory is doing, how's your inventory productivity, are you getting the return on your inventory investment appropriately, how's cash flow, things of that nature.
Yeah, and it's right here. And look at this. I built you a slide for this, Alan.
I love this.
Let's talk about it just for a second. I'll take the balance sheet. You'll take the P&L?
Perfect.
So on a balance sheet, it's a picture of what you own, that's your assets, and who you owe are your liabilities on a day and time. So on any one day, it tells you, what do I own? What are some of the things I own? Well, I have a cash account, have money in it. I may have people that owe me money, that's receivables. Inventory, you have assets, and maybe you have a rental pool of orchestral instruments, maybe some band instruments. That's what you own. So that tells you what do you have that's worth something. And it's what you do with that is what really is how your business performs. What's the balance, or the bottom of the balance sheet? My liabilities. Who do I owe? Trade vendors, banks, accrued taxes for your sales tax, lines of credit, long-term debt. So a balance sheet, you don't have to really try to geek out on this and be like a balance sheet expert, but there should be some of these key terms, as Alan was pointing out a while ago, that you should know how to read, and that information is on the balance sheet. And then the balance sheet interfaces with the income statement, Alan.
Exactly. So on the income statement, as the name suggests, we list out all of your revenues, the money you made over a period of time, and we list out all the different expenses that you incurred over that same period of time. The difference between the two is hopefully profit. So here we have revenues in this particular company is $3.5 million, direct costs. So we actually like to break out a lot of these expenses in a manner that shows you if you're making money selling product, renting product, delivering equipment, lessons, repairs, rentals,
Right.
all those different activities. And then we like to show the overhead of the business, and then things that are sort of not as part of the ordinary operations, but things that do, like interest income, or if you have a loss on the disposition of a piece of property. So, but all those revenues and expenses hit the bottom line, which shows you whether you're making money or not, and it gets added to the equity section. And Daniel, maybe you can have a final comment about the difference between assets and liabilities and what that shows.
Yeah, we can't see it down below, but that's going to be the equity section.
Right.
So right here we had $2 million of assets, and you can add these two numbers up here quickly to see we've got $1,450,000 of liabilities. Is that math right?
That is right.
And you know what 1 + 1 is equal to, right?
Anything you want it to be.
Anything you want it to be in accounting, that's right. But the difference between those two are what's going to be the equity section.
Right.
And Alan, what I would tell them, and tell me if you agree, that this may be a little foreign to you guys watching, but priority number one is watching your income statement and getting that net income to be exactly what it says, net income, not a net loss.
Exactly.
Once you've mastered that, then you need to move over to the balance sheet.
That's
But
right.
you really got to start somewhere with that. And these statements might be, if you're not sure about these statements, talk to your accountant.
Right.
They can help you understand them. There's all kinds of resources. There's resources on the NAM website where you've done videos about how to read financial statements and stuff like that. So let me end this section with this, Alan. In my opinion, a best practice would be not only using those documents, but looking at them. How often do you think we should look at them? I like to say on a monthly basis.
I would agree with that.
Too many things change week to week, day to day.
Day to day, right, exactly.
But you can't really go much more than a month or two because things are seasonal with quarters.
So would you agree that a December year-end music retailer should probably be looking at how they did for the year in late January, early February?
Yeah, exactly.
How do you feel about doing it in October?
I feel like then we're just preparing a historical data report.
Exactly.
We can't give information.
And it's not useful,
Right.
or it loses its usefulness because you're already 9 months into a new year.
Right. But let me put this list up here so you can see them. Here's some of our favorite reports, and many times your software systems will do this, but you'll just have to check. Obviously, we just went over the balance sheet and profit and loss statement. By the way, profit and loss is sometimes also called an income statement. Sometimes it's called, Alan said, the bottom line.
Right.
Inventory productivity. Again, we have tons of resources for people if you're not sure about how your inventory is producing for you. Because remember, your inventory is your liquid dollars that are now hung up in an asset, and it's what you make with those is how you get your return on those.
Exactly.
That's what the GMRI stands for, gross margin return on investment,
Right.
which we're talking about inventory. Inventory aging report, it's a little bit different because this tells you what's been around for a long time,
Right.
arguably not making money. receivables, contract aging. If you're not looking at your rentals and seeing how often people are paying you, that's could be missing some opportunity in accounts payable. But all of these point back to your balance sheet and lowering, like on your inventory, in your receivables, in your aging, in your payable. It's running your balance sheet. So you may not be an expert in your balance sheet, but if you can work on coming up with these things, that's the steps, the building blocks to get you where you're doing your balance sheet.
One comment that I do want to make, and you may not understand this today, and you can talk to your accountants about this or read any of the articles that Daniel has alluded to, but if to assure ourselves that your P&L, your income statement is correct, we actually make sure to prove that your balance sheet is correct. It's a lot easier to determine on a day and time, like the last day of the year, how much cash you have in inventory. It's just you reconcile your cash account, your bank statements, you count your inventory, you get a list of all your trade payables, and if we can assure ourselves that we know what the assets and liabilities of the business are, then we have identified exactly where the equity of the business is on that day and time. That means that the P&L shows us how we got there. Essentially, that's what it means. So they're very interrelated, and together they tell you an awful lot about your business. So they're both critical. Everybody, music retailers, like many business owners, just not going to find retailers, they're all about the P&L. Did I make money? How big are my sales and stuff like that? And we're not downplaying that. That's very important. But you want to make sure that it's an accurate P&L, and that how you assure your accuracy is by making sure you look at your balance sheet.
All right, enough geeking out on that topic, right, Alan?
Exactly.
Financial statements and looking at things on a regular time. Include your managers in on this meeting, but make time every month to work on your business.
Got it. You know what, Daniel? I'm old enough to remember when businesses used to account for their activity using a pen and a piece of paper, ledger paper, like sort of the Bob Cratchit kind of thing.
Was that called an abacus?
Yeah, I think so. It was before that even.
Oh, before that, okay.
Yeah, exactly. And one write sheets. I've seen all kinds of crazy things, but with the advent of computers, things actually got a little easier. But what was funny is, I can bring it forward a few years and say, the crazy thing that we really shouldn't ever see these days is the use of multiple software packages from an accounting standpoint. Like in the earlier days, and I'm talking about 10, 15 years ago, you'd see some clients using QuickBooks for general ledger, or using maybe an industry-specific package like AIM SI is one in our industry, or Rain, or some of the other ones, and or they use Excel spreadsheets to do other kinds of things. That's really kind of nonsensical, because there's a duplication of effort, and really you should be using one integrated accounting software package. Because if you got all the different components of receivables and payables and ledger and inventory and purchase orders and things talking to one another, it should be as easy as pressing a button and you can get some of the key reports that you were talking about.
Exactly. And Alan, people always call us and they'll say, what software should I use? We put some names up here that are in our industry. Retail Up is in our industry. Tyler, I'm not sure they're still actively looking. We have a couple clients using Tyler. Rain, and this is AIM by Tri-Technical System. Those programs, they work. Are they perfect? No, but we have software for our business. Is our software perfect now? No. But you learn to get along with it. And what we say to our clients, anybody, they say, well, do I have to use QuickBooks to become a client of yours? The answer is no. But we want you to use what you're comfortable with that can produce the kind of reports that you need to make decisions with your business. I have a couple people using Excel. And this is just a small sampling, but we have clients that are using Excel. But if you're not using anything, or you're like using some of QuickBooks and some of Excel and some of Rain or AIM or Retail Up to use your business, you should probably look at trying to push things together. Now, Alan, I'll tell you, just so they know, Rain and Retail Up, they do interface with QuickBooks for their accounting system. So you might have to have more than one system, but ideally you press a button and it comes through. Tyler and AIM are a full encompassing program. But if you don't know what to do, or you don't have software, you need to get out and look. Here's some suggestions that we would say to look for based upon kind of best practices. One is, look for the mobility of the point of sale system, or better yet, that it's in cloud. If you can do it from an iPad, I mean, you guys know the speed of everything is moving up. So you got to be mobile and you got to have good access. Online integration. Again, you don't have to be a huge online seller to do this, but you just want to make it easy to maybe sell product, and better yet, a lot of people have good customer access. They can check on their rental account, or they can check on a repair or something like that. So there's ways like that. Customer management, being able to track a lead. To say, what if somebody's interested in a very high-end particular violin? Wouldn't you want to have a note of that in case that said high-end violin comes back? I mean, it makes sense, right?
Right.
I don't know.
No,
I'm just a trombone player. I only have one trombone, so I don't know. Rental customers.
It makes no sense to me.
Exactly. Tracking all the rental customers, tracking the payments, the delinquencies, where are they? Inventory management, we just talked about. And then a financial integration that Alan was talked about a while ago to make sure that you could produce the profit and loss and balance sheet. These are just things to look for, and what you have to do is you have to treat this like an investment in your business, and you have to find something that you're comfortable with that'll work.
One of the things that we've seen in our own business is that the hardware costs that we used to shell out tens of thousands of dollars for every time there was updates, that's sort of gone by the wayside. We don't have internal servers anymore, so we've been able to have great savings in hardware. The money's been redeployed in a different way, though. We are now in the cloud, where we happen to be using Amazon Web Services, so that gives us the ability to, and by the way, with the pandemic, we've had to rethink about how we can operate remotely. Some of us had to work from home, so we needed a solution where we could in fact do that, where if we had power loss or things of that nature. And so a lot of these cloud-based accounting software solutions are really the way to go, because while you're still planning, many of you are still planning on, and hopefully will still be able to conduct business from your brick and mortar sites, there's going to be times when you're up late at night, early in the morning, you're at home, you need to access financial data, you want the ability to go online and grab that information and know that it's secure and know it's backed up.
Yeah,
so,
it's right. And Alan,
the technology exists.
The technology exists, and like what we said earlier, is not one system is going to be 100% perfect.
Right.
We get a lot of calls where people are like, well, it just doesn't do this or doesn't do that, and you've got to pick and choose.
Right.
You're looking for the solution that's going to get maybe 95% of the way there. But most of this comes down to you taking the time to find a product that'll work for you in building processes.
Right.
Because here's the things that we see that we don't like. The double entry, even if you do everything one way in store and then send your bank statements to your accountant, you realize that's double entry.
Right.
The accountant's doing the duplicate work. And so doing that, you get errors, it's labor intensive, it's costly. And then you get into these points, you get an inconsistency. Again, when people call and they say, can you tell me what's going on? And they don't have an inventory record. We can't look at their inventory and see how they're doing. And then the worst part is that, you just can't be that agile with financial decisions.
Right.
And again, it does come back to our profession, but this is like a basic building block of having a music store or any business. Like you said, Alan, you have to have systems that can track the data and produce the reports you need.
Right, exactly.
Because you used the example of a doctor a while ago. Those balance sheet and profit and loss statements, that is the X-ray.
Yes.
That's what we're looking for.
It's funny, like you mentioned that too, like we see a lot of medical practices are now able to look at online X-rays and things like that. And and I'll leave on this note, the one organization that's put some time and effort into realizing that there's a lot of double entry in their systems and now have been able to get around that is the Internal Revenue Service. By having tax returns e-filed, now prevents them from having to get paper copies of returns and rekeying in all the same data that we did in the preparation of returns. So e-filing is not only great for the Internal Revenue Service, it's great for Americans because you theoretically get your refunds quicker. So they figured that out some time ago that would save a lot of labor.
Yeah. It's important. So spend some time, find something that works for you, and having good data management systems are very important.
This probably won't come as a shocker to you, but we are big fans of business advisory teams. The old joke is that accounting expenses are really not an expense, it's an investment. I don't know if you've ever heard that one. But in some regards, it really is. We like to think of the advice that we render our clients as being able to not only guide them and keep them compliant with tax rules and accounting rules and things of that nature, but also to assist them in saving money. If we can help clients increase their selling margins or help clients minimize tax, those kinds of things, that's where you get the cost-benefit relationship where if you've got a good business advisory team, the money you spend on that team will hopefully pay off in spades, so to speak.
So Alan, it's interesting you say that, because I feel the same way, and not just because of the profession we work in, but why do so many people look at business advisory? We might as well be putting dollar signs up there right now,
exactly.
Right? But you know what happens is that a business advisory team isn't, popular or something that somebody needs or thinks they need until they need them.
That's right.
And then the problem with that is sometimes it can be too late, right?
Exactly.
Because you've got to have people. It's not something that you just say, "Hey, you're my advisor, and I'm ready to go, and you can fix the situation," because you get into issues of trust and working together.
Think about, why people don't like spending money on business advisors? Okay, let's talk about just a couple of them. You're spending money on a lawyer. Either you're spending money for something that you're hoping doesn't happen,
Right.
or when it does happen, like a lawsuit, it's all negative energy. Yeah. You're just spending money. Think about an accountant. While we can make the argument that you're paying for valuable advice, it'll save you money, a lot of people say, well, I need an accountant to do my tax return. I hate paying taxes. And so they just see it as an extension of the government. Right. And then one of the things I guess even I with insurance agents, who can understand an insurance policy? So you have an insurance guy or gal assisting you on something that you really don't have any understanding, and I don't have any understanding. So it comes down to blind faith and trust. You're spending dollars on something that you're just hoping will pay off in the event something bad happens.
Right. It is. It's almost like an insurance policy itself.
It is.
But what's interesting is when we look at some of our more successful businesses, most of them have an advisory team.
Right.
And let's look at the advisory team, because I think there's two types of advisory teams, Alan. There's what's internal. And internal, let's say you're the owner, you've got maybe multiple owners, business owners.
Right.
But maybe you have a management team. You don't have to have an official management team, but maybe it's a manager or a department, a person that runs each of your departments, somebody that you get together with and put your heads together and try to figure out what works for you.
Right.
Because remember, if you take your management team out and you just run the business you want to, with your mind and your thoughts, it's going to be your business, and that may be good enough. But sometimes there's power in numbers.
Love it.
Yeah. Because you can't remember there was we talked in that other session that we did about you can't be the guy that does everything. Right. You can't be the man of all the hats that wears all the hats in the bit.
And it's funny in our business, like Daniel and I are about 20 years apart. And like you get to my age, I'm 64, and it's like you start talking about, these millennials, they don't know what hard work is, and like all this something. But you know what? When you start talking to people that are a generation away or 2 generations away, all of a sudden they're seeing the world a little differently. They have some different thoughts, and they're probably more in tune to the world changing than us dinosaurs are. So don't ever poo-poo someone at even young age. A lot of people have great thoughts, great ideas and visions, and can bring that stuff to the table. I love the internal management team as an advisor to your business.
Right.
It's great.
Well, and sometimes that you don't know your employees have that ability until you ask.
Right.
You have to open up to them.
Right.
More about that in a little bit.
Yeah.
And how about an external team? Alan, these are the people you were talking about. An accountant. Alan mentioned accountant, an attorney, an insurance agent. And again, why an insurance agent is because they're going to help you. You need to, in my opinion, you disclose as much to them about your business as possible so they can help you get the right policy. So if something happens of theft, a flood, a fire, you're not worried about it. You just turn to them and say, okay, let's make this happen.
Yeah.
Banker. Alan, why do they need a banker?
Unless you're flush with cash, not a lot of us are in that position unless you've been around a long time, and even then it doesn't guarantee you that you are. Often if you're in a business that's growing, you need to grow that business by borrowing money. A rental pool is a perfect example where you can make an investment into your stringed instruments, put them out on rent. You'll get that investment back in little dribs and drabs of rental income over a period of time, but you got to pay for the instruments up front. Usually you have to get loans to do that. And what's funny is the interrelationship among all these people, because the banker, in order to help you with these loans, is relying on the financial information coming from your accountant. The attorney, when they're crafting contracts with consultants or with contract labor or other kinds of their lease agreements. So a lot of times they need to know the tax effect of those agreements. So they're constantly talking to the accountant. Same thing with your financial advisors. They want to know what tax bracket you might be in so they can help establish a good financial plan for you.
And we've seen that financial advisor pop up even more prevalent in the last 5 years.
Yes.
Because of people are looking to succession plan their business
Transition
out.
their business.
And we have to look and see, well, how much money do you, the first question we ask is, well, how much money do you need? And they go, I don't know, you're supposed to know that. And it's like, well, not sure we do.
Us baby boomers are getting tired of working.
Yeah, that's
and
right.
I love during the estate planning process when a client says, now, if I die, and I always find that funny because I don't think it's an if.
Yeah,
Pretty sure
when.
it's not. It's kind of a when.
So here's just a couple tips on how you assemble this dream team, and it's your management team. Again, we'll talk about the internal piece of it here in just a second, but as far as your external dream team, you may have to ask other business owners, hey, who do you use for insurance?
Right.
Ask your accountant, do you know a good attorney? Do you know a good agent? You could find people by just like kind of networking around.
Right.
But treat it like any other relationship.
That's right.
I tell people, Alan, when they're going to select a bank, go interview the bank. If you don't get along with the loan officer, how do you think you're going to get approved when that loan officer goes and presents your case to the loan committee?
That's right.
You have to have good
There's got to be
relationships.
synergy.
Yeah, there does. Build the relationships as soon as possible. Do you know why I put that on there, Alan?
Why?
Because the time that you need to have these advisors is when you don't need the advisors.
Exactly. Like
So
a banker.
Yeah. When you are flush with cash and you're thinking, well, I might want to do something, well, go get that relationship with the banker.
Yeah.
That's a good time to start. And don't forget, you can check with your local small business administration. There's offices in most of the big cities, and they have something called a SCORE advisor program. This is you just have to look it up. It's a great little plan where you get paired up with people that used to be business people, but they're retired and they're giving back to the community.
Exactly.
It's really a great plan to have. And then don't be afraid with your dream team. You got to ask questions. Listen to their guidance. Listen to their guidance, right, Alan?
I love that.
Yeah, I know. But that's how you build trust. Listen, we always tell clients, our job is to present you with options, talk about the pros and cons of each option, and then let you make a decision. When you make a decision as a client of ours, we're never going to say, well, I told you so, I didn't think you should do that, because that's not our role.
Right.
Our role is try to give them the advice and then support the most we can. So if you can build that trust where you can have that kind of relationship, that's really how you can utilize your advisors to really run with your business.
Daniel, I love your very first two because a lot of time, look, there's good accountants and there's bad accountants. There's good lawyers, good and bad lawyers. The guy, what they call the guy who graduates last from med school? Doctor. Anyway, so, so you don't always know what you're getting. Yeah. That's why it's important to ask other people in the industry, who they may recommend. But it is equally important to interview and check references because just because someone says they're good doesn't mean that they necessarily are. But so I love that you have those two. They're kind of opposite, but they're interrelated.
Yeah.
Really good point. So
assemble your team. If you do nothing else, get some people in going, and so that way you'll have those advisors when you need them most.
Exactly. Daniel, I used to always think that for a music retailer, their most important asset is inventory.
Yes.
No. No, okay, it's not. I think you are right. It's not inventory.
Yeah, I know.
You can replace inventory, right?
Yeah, and inventory is basically something that someone is looking for.
Right.
But face it, Alan, if you have good inventory and you don't have a good store, you don't have, or whether you're selling it online, you can't present it online.
Right.
You don't have somebody to help service that customer.
Right.
I mean, everything dealing with that inventory, which is very important, by the way, is your people.
Right.
And I think too often, people are what gets overlooked because your investment in them is basically paying them for what they do in the time they work.
Right.
Versus investing in inventory, it's like that's an investment. And you know what's problem, Alan? If we're just being honest, many times we like to be honest, right? Yeah. This same number one asset can be your number one pain in the butt.
Mm-hmm.
Face it, right?
Yes.
Personnel issues are one of the things because it's just people are people.
Right.
And your ability to manage and relate with your number one asset is really what makes the difference in a business.
Yeah.
Because I can tell you, again, I'm just thinking about characteristics of some of our very strong, and I would define strong by, you know, having a great business with a great customer base, very equitable, not leveraged, you know, going back to those prior things we mentioned. And behind all of those things are usually good people and good processes. Right. And that's really what you need. You have to have good people. Yeah. So what we'd like to just remind you of, and this is a little beyond our normal accounting scope, but this is more what we see, is that when you deal with your people, and by the way, this is the stuff we deal with here, yep. Because we have people here. That's how we get all the work done, because everybody knows Alan and I don't do it. ABC can be whatever you want it to be, literally in these days, but we say always be coaching. Because yes, you're going to get disappointed. Yes, a person, you just showed them that and they're going to do it wrong. But it's about patience and management skills on your side, but also keeping in mind you got to be coaching. Because again, you can't do everything.
Right.
You want to do everything. There's things that you need to do, but you can't do everything. Right. Right?
The best businesses are the ones that are not completely reliant on just the owner.
Right.
It's really you have a team that's in place that's able to run in the event the owner gets taken out for a period of time.
Right.
Illness, hit by a bus or something.
And think about
like
us here. We sell ourselves as an FKCO team approach.
Right.
Because we know that if something happened to me, we don't want our clients to be left hanging saying what happens. So they know that Alan's here and we have other people in our office that can help with them. So it's very much a team approach. Always be coaching. That's the way you're going to get them better. A big mantra of mine is inspect what you expect. And the key to doing that is you have to set targets. It doesn't matter what you're doing, whether it's targets for how much to sell or how many items to sell, or I need you to sell this piece this week for whatever reason, whatever it may be, you have to have a target to let somebody know. Because it doesn't matter how much you like music and how much you're passionate about music. There's still some salespeople that would rather sit over there and play the instruments and have a jam session and sell it. Right. I mean, that's just a fact, right? Right. So we just got to get over that and say, no, this is what we have to do. We have to inspect what we expect. Create transparent compensation plans. Now is where we kind of get into where the meat of creating that relationship. And I'll tell you this, if your compensation plan is not getting results, then you really need to open that can back up and find out why it's not getting results. Right. Many times it's too complex. It's outdated. Right. A salesperson's like, yeah, I don't even know how they figure it, but that person in the back office does it. Yeah. Look, if they can run a report and take a calculator and figure their commission, don't you think that would be a little more of a incentive to go sell stuff?
Right.
You know, it's got to be transparent. And this is a big one to me. Know what motivates each person. Money is a motivator, but it's not the only motivator. Sometimes people just want to feel good about what they're doing. We've seen in this pandemic, I can't tell you how many times we've seen, and I've heard from music retailers that, oh yeah, I've got 3 employees, I got 2 employees that aren't taking any pay right now because they're really set and they just like working here. I mean, doesn't that give you a picture of our industry right there? Totally. It's a passion thing, but if you went to that same person and said, if you sell more, I'll give you $10,000, they may go, I don't need $10,000. Right. You know, it's really a very... it's a very kind of it's an individualized thing.
Yeah.
You can't just say money motivates all my team.
Totally. Daniel, you know that bonus you're getting at the end of the year?
Yes.
Don't worry about that, but you're doing a great job.
Okay, thank you. I feel so much better than that. Let me give you my wife's number so you can talk about the funding. Got it. But it sounds silly about this being your number one asset, but if you're not doing these things, we're going to put up another slide that's going to show you kind of the downside of not doing this.
I want to give Daniel credit for the ABC because he said that to us a few years ago. And it made us always now, whenever we're not getting the results out of our staff that we think we should, the first people that we look at are ourselves. Are we doing enough to basically coach everybody, to show them the procedures of how we lay things down, or just whatever it is to achieve the goal set that we have laid out. So always be coaching has become a mantra that Daniel came up with, and I love it. I really do. Yeah. Kudos to you.
Well, no, thank you. I probably heard it somewhere. You know, you hear
no,
ABC.
That's good. Love
always
it.
Be chewing. You know.
Right. Well, that would be mine.
Yeah, there you go. So Alan, tell them about this. What if?
Yeah, there's the old joke in our industry, what if I train someone and they leave? And then the answer is, well, what if you don't train them and they stay? Right. That's a problem. So, the point of this is that you don't want to ignore your staff. You always want to be focused, just like I said, on the coaching end. If if you don't create good morale in your organization, some bad things will happen. They won't provide good service. I'll get back to that second one in a second. They'll go work for your competitor. You feel like you're being held hostage in your own house. So a lot of bad things can happen. One of the things that we see often, more often than we like to see in music retailing, is that second thing. They're unhappy, they find other ways of getting paid. Do you know what I'm talking about? Yeah, they will start stealing. And stealing doesn't always have to be they're stealing inventory. It can actually be stealing time, where they're getting paid for time not really worked, where they're on their phone, where they're engaging in social media with their friends when they should be working. There's all kinds of things that happen if you don't take care of your people and you ignore them. They're going to become disgruntled, and during that disgruntled period, they will resort to things that could be damaging to your business. So you always want to be aware of that, and you always want to be challenging them to be better selves. And
this isn't the fun side to talk about of this topic,
but it's reality.
But it's reality, and we've seen on this number 2 item. We just had a client not too long ago that found a person that stole over $50,000 worth of inventory over a 1-year period. $50,000. Might as well be cash.
Yeah, exactly.
And and when you find out, you feel betrayed. You feel like there wasn't trust.
Right.
But there are signs there. Like if you're feeling like you're being held hostage, there's probably a sign that something else is going around.
That's right.
So think back about the slide prior to this and all the things that you can do proactively to treat your number one asset like they're number one, help them feel that they're number one, and then let's hope they just drive your business to a level that you're like, wow, I couldn't do this on my own, because that's why you hire them.
Right, and reward them, and definitely reward them.
Yeah, so give me my bonus
It's
back.
coming, I promise you.
Okay, thank you.
I didn't say which year. Okay.
Alan, our last part of the day. When you think about best practices, and again, I keep saying, we get calls all the time. What are your best people doing? And not just what are they doing on their daily basis, but what's the characteristics of their store? We like to see a bunch of different things. We see the owners being involved, and we see good financial data and good people and processes.
Managing debt.
Yeah, exactly. All of those things we've talked about. But really what we see is some of our more, I would say, stable businesses, because they've been built over a period of time, is they have very diverse revenue streams.
Right.
Meaning, and again, picture's worth 1,000 words, their eggs are in multiple baskets, not one basket.
Love it.
And that looks different for everybody. It's like, no, I mean, you shouldn't be a music store and then maybe open up a little custard store on the inside of your music store. We're not talking about that kind of diversification.
Unless the custard's good.
If it's good. But there's a lot of times where our music stores do buy the real estate they're in, so that diversifies a revenue stream for the owner. But now let's just dial into your business. What about within your business? Think about this today. What if the product, if you put if you just said, I'm going to identify my main product or service. Now think to yourself, what if that goes away? What does that look like for your store?
Right.
If you say, we're in trouble, maybe you need to diversify.
Right.
And Alan, if a picture's worth 1,000 words of what's going on now, you know what that is?
I do. That's COVID-19.
And what has that taught us?
Yeah, that is, you can't count on anything. What you can count on is that something's going to happen that you can't count on.
Yeah.
This has been very scary for us as a nation. It's been scary for us business owners. It's been scary for us business advisors. It's been scary for bankers. It's been scary for employers. It's been scary for employees.
So who has it not been scary for?
The wine salesman. The guy selling liquor. That guy is not worried.
Yeah.
I actually have one. A very good friend of mine, happens to be a great singer, is a wine rep for Bogle Vineyards, and his business is way up.
Wow.
So like with every crisis, somebody's going to do well, but he's in the minority. Pretty much our nation is going through a real tough time dealing with this, and it's scary because it's not only business, it's our health too.
Right.
So all kinds of anxiety happens, but you have to prepare for the unexpected. And I love the fact that you're bringing up diversify your revenues as a way of doing this, because that's what stockbrokers do. Do you know that?
Absolutely.
They don't say put all your money in bonds, put all your money in growth capital stocks. You're diversified in many different kinds of stocks, bonds, cash, mutual funds, all those things, so that because in any one given year, something's going to do well and something isn't going to do well, and we don't know what it's going to be. So Daniel's going to talk a little bit about these typical, if you want to call it typical, ways that music retailers diversify their revenue.
Well, yeah, and most of them you probably know about: sales, rentals, repairs, and lessons. But if you just said, I'm only doing sales, well, that could be fine for now, but what happens if something else happens? Because a lot of our music stores that have done well traditionally over the years and appear to be weathering this COVID storm pretty well have components of the first four. And you may say, yeah, right, how are people doing lessons? I can tell you we have clients that they lost maybe 5 to 10% of their students by taking everybody online. So they were able to get their teachers bought in and they got their people bought in, but that didn't happen because of something over one day. That's something they've been building for a long time.
Exactly.
Because we have other music stores that are like, I'm teaching 5% of the lessons I used to teach. That doesn't mean one's better than the other.
Right.
It just means their revenue stream and their business plans were built in a little different way.
Right.
And now, Alan, you know what's crazy is people are now going in. You notice I put other services? Yeah, start dreaming. What's another service? I mean, we were talking about it, just thinking about it before we shot this video for a violin store. What about appraisals? Should you get, what about doing valuations? What about doing storage? Some people do storage, like a lot of our piano dealers do storage in this time. And what about, I mean, obviously you're probably doing consignments, but what are other services that you could be offering that are going to help you weather whatever the next thing looks like?
Exactly.
Do you know what the next thing is going to be?
I honestly don't.
Yeah.
Maybe new liquor stores. I think
exactly.
that's you know what? What's funny, kinda, is like when my kids are in their 30s, used to tell me, Dad, like all me and my buddies, we like buying online, and we like being able to in the middle of the night, sit in our pajamas on our laptop and buy stuff. We don't feel the need to go to the malls and the other places where you and Mom like to shop. Some retailers heeded that kind of forewarning, if you will, or change in the model of how product is sold. That's not to say that you can't make it as a brick and mortar store, but I dare say that these days you really have to be, however you reach your customers is what you should be doing, and a lot of customers are being reached and got their dollars have been gotten through online sales. So even when you look at diversifying, even within just the topic of sales, we have brick and mortar and we have online dealers.
Sure.
So if this has taught us a lesson, we've always got to sort of be thinking outside the box and finding new ways of
creating new ways to do things is an important thing to look at, because it's really the vision planning. What you've done in the past is we're telling our clients.
Right.
You can rely on the past for some things, but I don't think you can rest on the past to bring you back.
That's right. That's
right.
Right.
And so, Alan, as we end this time, it's been a pleasure to be with you guys today. Again, we're sorry we can't be there in person because Alan has even worse jokes to tell in person when we're together. But we did do another session for the group.
Yes, we
did.
It's
on the things not to do.
That's right.
So if you want to check that out, I'd encourage you to check that out. But we want to leave you with this thought. Anytime we give presentations and when we talk to our clients, we like to say at the end, so what are you going to do today? Because it really comes down to an action plan. Because if you just invested the 30 minutes to watch this video, and maybe you made some notes, but if you just throw them in the drawer and you go back to dealing with emails and everything else that's important, don't get us wrong, but then you don't make action. So you're not going to have success unless you set goals and plan for success.
Right.
So you really have to break down your business and say, we have to do something, because resting on what's always worked may not work as we move forward.
That's right. And don't be misled by sometimes the simplicity of the things that we say, because we are trying to deliver all this information in a simple way that's easy to understand. And it always amazes me, like we even talk about inventory management, some of the principles of managing inventory are very simple, but yet it amazes us like how often they're ignored. And so there are little tidbits of pearls of wisdom throughout this presentation of things that we said that you should take literally and really, embrace and put in, implement into your business. Some of this, again, may seem very simple, but it's it's not that hard. You just need to implement it in your business, and by following these best practices, we know your cash flow will improve. We know your profitability improve, and you'll live to see another day of the music retailing business. So that's ultimately what we want. Because if we keep you in business, guess what? We stay in business.
There you go. So long for now. Thanks again for joining us, and we look forward to maybe meeting with you soon.
Sounds great.